Yes, Mom, yes. Yes, Mom, okay, look, I need you to double my allowance, okay? I'm low on funds. Tell Daddy to sell his yacht and give me some money so I can support myself, okay? Now, no, I'm tired of your questions. I have a client, okay? I have a client. I have to go. Bye. Mommy, she can be such a pain in the butt, you know? Anyway, what's up? Hey, how's it going? I'm a financial advisor, and I work for Melvin Capital. Have you heard of Melvin Capital? We are the hottest of the hot. We have the hottest stocks. We buy stocks, and we short stocks, and we make our clients a huge amount of money. We know more about the market than anybody else because we are a hedge fund, the hottest of the hot. Exclusive to rich people. We're going to make you millions. Welcome. Now, let me show you an example, okay? Let me show you an example of one of the hottest stocks that we just shorted and that we're going to make buku money on. It is called GameStop. Have you heard of GameStop? It is a failing company, and we have decided to short the stock, and we are going to make huge money. Now let me pull it up and show you, okay? GameStop. Okay, here's the stock. Wait, what? What? Why is the stock at 200? What the hell? This isn't supposed to happen. We shorted that stock. Oh my God. Oh God. Look. I have an emergency, okay? Don't go anywhere. We're gonna make hot money for you, client. Don't stress. But we have a little problem, and I don't understand what's going on. I will get back to you.
Welcome back to Strongman
Personal Finance. Welcome back, everybody. Today is a very momentous day, and I am laughing uproariously because I just found out that a big, hot, delicious hedge fund just got screwed by a bunch of clowns on a Reddit forum, by a bunch of people like you and me. This hedge fund, Melvin Capital, decided to short some hot stock, specifically GameStop. Now, what is shorting? We'll get into that in a little bit, but I just want to let you know that Melvin betted on short-term fluctuations in a stock to try to make some money for their clients. And you know what happens when you gamble on the market in the short term? You get freaking screwed. Now, you know what's really funny? Do you know what's hilarious? Melvin Capital guys, they wear suits because they're hot, because they're businessmen. They got their CFAs. They are hotshot financial advisors. They collect the fat fees from their clients. And guess what? They just lost big by doing something stupid that I told you never to do. Now, I want to show you something. Do you want to see what I'm wearing right now? I wear the crappiest clothes, and yet somehow I give you amazing financial advice. Isn't it crazy that a man that dresses like this, that dresses like complete and utter garbage with a big pecker shirt and some duckies, this man knows more than any of these clowns that will lose you money. Welcome to Clown World. Now let's start and talk about what shorting a stock means and what is going on with GameStop. Why is this stock skyrocketing? And then we'll end and we'll see whether you should buy the stock or not, which you shouldn't, but we'll talk about it. Let's go. Shorting stock is actually a pretty simple concept once it's laid out to you. And all you're doing is gambling that a stock is going to decrease in value, and you're going to make a profit from that decrease in value. Now, how you do that is you actually borrow shares from somebody else, and then you sell those shares at a higher price point. You then wait until that stock crashes, and then you rebuy the shares with the cash that you had from selling the shares originally at a lower price. You then return the shares of stock to the person that you borrowed it from. So you make money by buying the shares at a lower price than you sold them at, and you have to subtract interest expense and stuff like that. But if you really know a stock's going to go down in the short term, you can make some significant money from short selling. However, it is a freaking gamble. Let's see another example. Now let's pretend that we're Melvin Capital And I'm going to show you exactly what happened and why Melvin made such a huge mistake and underestimated the power of a bunch of people on Reddit, consistently buying and elevating the price of a stock, which destroyed their short position. Let's go. I tried my best to make this freaking PowerPoint animation, and it's okay. So you're going to have to freaking deal with it, okay? Now, in this example, I'm going to show you how Melvin Capital borrowed shares of stock, sold them on the open market, and held on to cash in the hopes that they could buy the stock back at a better price. Now, like I said, don't get upset if the animations aren't perfect, but here we go. Now, there's three players in this scenario. There's Strongman, who owns a share of GameStop. There's Melvin Capital, who's trying to make some hot gains with shorting. And then there's Megadork, who just wants to eventually buy a share of GameStop. He's kind of the third party that's not necessarily involved. So what happens is Melvin goes ahead and borrows a share of stock from Strongman. And in return, Melvin pays Strongman some interest. Now, Strongman's not going to lend out his stock that he's holding unless he gets some kind of compensation. And he knows he's going to get it back, and he has some collateral. So some people just agree to lend out their shares to people in return for a little bit of interest if those shares are borrowed. Now Melvin Capital has a share of GameStop stock. Melvin goes ahead and sells that stock on the market at $10 per share, which is the going price at the time, because they're betting that that price is going to go down, and then they're going to buy that share back at a lower price and pocket the difference. So Melvin goes on the market, and Megadork's like, oh, GameStop. And he goes ahead and he buys the stock from Melvin for $10 per share. Melvin then stands by and waits and waits and waits. Eventually, the stock drops to $5 per share. And here's where my PowerPoint breaks down, but whatever. Melvin goes ahead and buys the stock back from Megadork, who is just going to take his losses, and then returns the stock to Strongman. So Melvin has made $5 minus the interest that he's paid to Strongman. Melvin borrowed the stock at $10 per share. He then immediately sold it and held on to the cash. Then when the stock dropped, he bought the stock back at the lower price of $5 per share, and he pocketed the difference. Now, this is what Melvin was trying to do. They did all this analysis and research, and they determined that the stock was, at its current level, was unsustainable and that it was going to drop eventually based on the performance of the company. What happened was an entirely different story. Now, here's where the fun starts, and here's where I get to dump on Melvin Capital and any morons that think they can just day trade hot stocks or short stocks and try to make money in the short term, because it's freaking stupid. Now remember, Melvin borrowed shares of GameStop, and they sold it and they held on to cash to try to make some money in the short term by buying the shares back at a lower price when the stock hopefully or potentially dropped. But here's what happened. Instead of the price dropping, a bunch of retail investors, like people from Wallstreetbets on Reddit, decided to buy the stock like crazy. Now, when there's a limited amount of stocks and a high demand for the stock, the price of the stock is going to increase. So Melvin was hoping that the price was going to drop, but that's not what happened. The price started going up and up and up because there was more and more demand. Now, here's where we get into this thing called a short squeeze. When a lot of short sellers see the price of the stock they're trying to short go up, they start to panic. Because if you short a stock, you're actually exposing yourself to unlimited losses. Because if you short the stock and then it goes up by $1,000, $2,000, $3,000 per share, you have to eventually buy the shares back because you borrowed them. They're not your shares. So this starts what's called a short squeeze. All the short sellers start to panic, and they start to buy the shares back too to limit their losses. And that just perpetuates the cycle of the stock going up. Everybody's trying to buy a limited amount of shares. There's Wall Street bettors who are trying to screw over the hedge fund, and there's the hedge fund and other people who are trying to buy back the shares as fast as they can to limit their losses. And that's why you see these parabolic increases in the price of the stock. Now, the Wall Street bettors are hoping that the stock price just goes up and up and up and up because everybody's trying to buy them. There's massive demand, and they can actually make a ton of money.
Now, eventually, this is a whole house of cards that's going to collapse. Because eventually, the people that bought the stock trying to screw over Melvin Capital, they're eventually going to take gains. They're going to sell their stock. And eventually, there's going to be more pressure to sell the stock than to buy it. And the price will collapse. But in the meantime, Melvin Capital is having a hard time buying the shares back. Or if they do, they're going to have to pay a massive price for it. And the whole time, they're paying interest on all the shares they borrowed. So they're getting crushed in their returns. They are losing massive money. Now, how is this all going to turn out? I don't know. But do I recommend that you jump in now? No, I do not. I don't think you should trade stocks to try to make quick money. Because if you look at people like Melvin, they got massively screwed by trying to play stupid freaking games. So you can watch and laugh, and it's pretty funny. But don't get involved. Let it play out, and we'll see what happens, okay?
I really hope you guys enjoyed that video. If you like it, hit the like button, subscribe to my channel, because I love to talk about current markets, and I love to talk about how to invest and make money for the long term. So please like the video, subscribe, drop a comment, and we'll have a reasonable discussion. In the meantime, I think our financial advisors at Melvin Capital have one last thing to say. Bye.
This isn't supposed to happen. I am a financial advisor. I wear a suit. I'm better than you. I know more than you. I'm superior to you. This is bullshit. Oh my god. What are they gonna do? Ah!